Hi friends, good day. We have seen last class when a partner has become insolvent how to apply the rule of Garner versus Murray. Today let us look into the exercise number 4. A, B, C and D sharing profits in the ratio of 4 is to 3 is to 2 is to 1 decide to dissolve partnership on 31st March 2016 when their balance sheet was as under. Creditors employee provident fund. Since employee provident fund has been given is nothing but it's a liability. So creditors is a liability, employee provident fund is a liability. Employee provident fund means the employer contribution plus employee contribution will be transferred to provident fund, and that provident fund is nothing but it's about the future. It is also called as in Hindi Bhavishya Nidhi for the future. Like it's a kind of a saving. It's like after retirement they can get lump sum amount. I think that will serve their after retirement, post retirement life. So for that purpose, employee will be contributing. I think you might have learned in income tax also. Employer contribution, employee contribution. This is what is employee provident fund. I think this employee provident fund is being collected from the salary, and that should be given to, that should be deposited with provident fund department. So you will be able to learn statutory provident fund, um, public provident fund, recognized provident fund, unrecognized provident fund in income tax treatment of provident fund. Now coming back to this employee provident fund is a liability. So this will be transferred to realization account credit side. This is realization realization account credit side. Debtors realization account debit side, stock realization account debit side, prepaid expenses also is to be transferred to realization account debit side, but it won't be realized if you can get back. So prepaid expenses you are going for dissolution, if there's any chance of getting back, that is an asset. Otherwise prepaid expense will be transferred to realization account debit side. Suppose insurance, prepaid insurance, they won't be giving you back, only like advance rent. Like if you are vacating that as per terms and conditions, they may refund the money. If that is the case, that can be taken to relation account credit side. Otherwise prepaid expenses you can't recover. So even though whether you recover, you can't recover, it is to be transferred to relation account debit side. Plant and machinery relation account debit side, patents relation account debit side, and C's capital, D's capital. This is what I have given an example in the last class. Two partners capital accounts are showing credit balance, debit balance. So this we'll discuss after seeing the problem, complete problem. Now following information is given to you. One of the creditors took some of the patents whose book value was 5,000 at a valuation of 3,200. Balance of the creditors were paid a discount of 400. So let us see the creditors actually. What is the amount of creditors here? 15,700. Creditors 15,700. One of the creditors took some of the patents whose book value of 5,000 at a valuation of 3,200. See, book value 5,000 book value of patients taken at agreed value of 3,200. So what is the balance of the amount that is to be paid in cash? 15,700 minus 3,200. It is coming to 12,500. This 12,500 balance of creditors were paid at discount of 400 rupees. This is discount. Now it is coming to how much? 12,100. 12,100. That means how much cash is to be paid? Cash to be paid is, cash to be paid to creditors is how much? 12,100. Is this clear to all of you? So that means creditors we need to pay 15,700. But one of the creditors has taken 5,000 rupees worth of 5,000 book value of patents at an agreed value of 3,200. That means this is balance due, balance creditors to be paid. and that balance, when you are making payment, the creditors have given 400 rupees discount. That means what is to be cash to be paid? 12,100. This is about the creditors. Clear to all of you? Then there was a joint life policy 20,000 not mentioned in the balance sheet, and it was surrendered at 4,500. Is nothing but joint life policy received. So joint life policy received 4,500 because 20,000 is not mentioned, is nothing but unrecorded asset. When it is unrecorded asset, the joint life policy that has been received is to be taken to which account, my dear friends? Realization account. Clear to all of you? It is to be taken to realization account. Then remaining assets are realized in the following: debtors 10,800, stock 15,600, plant and machinery 12,000, and patent 60% of their book values. 60% of book values means here patents realized. See, book value of patents, book value of patents, how much has been given? 8,000. Book value of patents 8,000 minus taken over by book value of patents book value of patents taken over by creditors 5,000. So 8,000 minus 5,000, it is coming to how much? 3,000. These 3,000 were realized at 60% of book value. This is balance book value. %60 of book value is equal to 3,000 into 60%. How much has been recovered? 1,800 rupees has been realized. So what is the value of patents realized? 1,800. What is the value amount to be paid towards creditors? 12,100. No need to write the entry for patents taken over by creditors. Is this clear? No need to write any entry for patents taken by creditors because it is automatically adjusted. That's it. Expense of relation amounted to 1,500. D became insolvent and dividend of 25 paise in rupee was received in respect of the firm claim against this estate. Prepare necessary ledger accounts. Now here, who has become insolvent? D has become insolvent. That means C, even though C's capital account is showing debit balance, as I told you, simply by just by looking at the partner's capital, you can't decide whether it is solvent or insolvent. Last class we have discussed in detail about it. Even though C's capital account is showing debit balance, unless he has been adjudicated as insolvent, we can't say. But in this case, D has been adjudicated as insolvent. That means C is a solvent, but his capital account is showing debit balance. So after preparing realization account, for rule number 1, last class we have seen, I told you we will be following Garner versus Murray rule. Rule number 1, solvent partner should bring their share of relation loss in cash. When solvent partner should bring their share of relation loss in cash means even though partner whose capital account is showing debit balance, he also has to bring the relation loss in cash. But only what you can't transfer to him, the deficiency of insolvent partner won't be transferred to the partner whose capital account is showing debit balance. I repeat once again. Solvent partners should bring their share of relation loss in cash means A should bring if you got any relation loss, A should bring cash, B should bring cash, C should bring cash, share of relation loss in cash. But as far as D is concerned, as far as C is concerned, when deficiency of D, he says 25 paise in rupee is able to bring. That is what has been mentioned now. D became insolvent and dividend of 25 paise in rupee was received in respect of the firm's claim against his estate. So, as far as D is concerned, D's deficiency 25% is able to bring, 75% he can't bring. That you will be knowing only after opening of account. That deficiency, that loss won't be borne by the solvent partner whose capital account is showing debit balance. That means deficiency of insolvent partner won't be transferred to C. This I want to give you as a tutorial note. Tutorial note. Point number 1. By applying Garner versus Murray case in this problem, the solvent partners A, B, and C should bring their share of realization loss in cash. Even though C's capital account is showing C's capital account is showing debit balance. This is very important, otherwise you'll be having confusion. Even though C's capital account is showing debit balance here. Got it? The solvent partners A, B, and C should bring their share of relation loss in cash even though C's capital account is showing debit balance. Point number 2. The deficiency of C is to be borne by the deficiency of C is to be borne by solvent partners whose capital accounts are showing credit balance. The deficiency of C is borne by solvent partners whose capital accounts are showing credit balance, but not C whose capital account is showing debit balance. We have learned that deficiency of insolvent partner should be borne by the solvent partners whose capital account is showing credit balance. Even though C is also solvent, since his capital account is showing debit balance, he is not going to pay. The deficiency of C is to be borne by solvent partners whose capital accounts are showing credit balance. In this case, A and B in this case A and B should bear in their capital ratios. What is the capital ratio? You can see 4:2, or we can say 2:1, because this is fluctuating capital. No, we don't have current account, so it is a fluctuating. But fluctuating capital, I told you, adjusted capitals. In this case, we don't have any undistributed losses. We don't have any undistributed profits. So in this case, capital account balance itself is a adjusted capital. Okay. So that also I'm writing. In their capital ratio, that is that is 40,000 is to 20,000, or 2 is to 1. Even though it is fluctuating capital, since we don't have adjustments regarding that is, even though it is fluctuating capital, since we don't have adjustment regarding undistributed for undistributed loss, etc. So therefore capital balances were considered. Therefore capital balances were considered. Okay. So this is about tutorial note number 2, and I have already explained you. So now we have also done this, how the creditors, what is the amount to be paid to creditors, and what is the amount to be collected on patents. I think this you can understand. If you want, you can make in your material as a notes. Okay. So this explanation has been completed. Now he's asking us to prepare necessary ledger accounts. Okay. So for this problem, for to have a clarity, let me show you even deficiency account also. Okay. Actually, it is not required, but to have a clarity, I'm also going to show you deficiency account. The first account which I am going to open is realization account. Okay, so first account which we have opened is realization account, followed by second account. As usual, we'll be opening partners capital account, partners capital accounts, then followed by third account, balance sheet with cash is given or bank has been. Deficiency. Okay. So this is actually not required, but I only am opening, not mandatory. If is asking you, you have to open. Otherwise, you can adjust because it may be useful somewhere. I'm just opening deficiency account also to how to close the deficiency account also. Since he's not asking account, even though he's not asking account, I've opened, right? Okay. Now let me go to the problem part. Let me start this bank I have already opened. The bank account 535. Then debtors 15,850. Debtors 15,850. Stock 25,200. To stock 25,200. To prepaid expenses 800. Prepaid expenses 800. To plant and machinery 20,000. Plant and machinery 20,000. To patents 8,000. To patents 8,000. These capitals and these two capitals has been, we already opened that. It will be taken to partners capital account. He is the insolvent partner. Just I have rounded up. To balance brought down C 3,200. D 8,450. Next, Kratos 15,700. by employee provident fund 6,300. Employee provident fund 6,300. Then A's capital, B's capital 40 and 20. It will be taken to credit side. By balance brought down, A's capital 40,000, B's capital 20,000. Then next, this is completed. Now let us come back to this. This I already told you. What is the amount to be cash to be paid to Creditas? This explanation I've given already, because it's already explained you. I'm not writing as a working notes. But these things you can avoid working notes. If you want, you can go for working notes. Okay, I think you are group 2. I think time management is the keys I have been telling you. So here I am directly writing Creditas cash has been paid to Creditas. How much? 12,100. This I am writing here to bank. $12,100. How you got that? $15,700 minus in 3,200 has been investment patents has been taken out, no, and minus 400 rupees discount. It is coming to 12,100. Then patents has been realized. Okay, all those things we can write here. Now by bank patents, how much we are having? 1,800. It is coming to patents realized is how much? 1,800. How you got the, you are having clarity now how you got that amount? If you want, you can write here 8,000 minus 5,000 into 60%. 5,000 worth of patents has been taken. This all I've already explained you. Then next, we are having how many assets? You can see patents is completed. We are having debtor, stock, prepaid expenses, plant. Of course, prepaid expense he has not mentioned anything, so we are left out with the debtor, stock, and plant and machinery. Here he has given. And also we got joint life policy. Joint life policy not mentioned in the balance sheet and was surrendered for 4,500. It is just like unrecorded asset. Joint life policy surrender value. Unrecorded asset realized. Bank account data to realization. So let me write in the inner columns. Totaling will. The remaining assets are really following value data. So how much? 10,800. I'm writing URA. URA means unrecorded asset in this problem. You'll understand that. Debtors realized for 10,800. Stock 15,600. Plant and machinery 12,000. Patents have already explained. Expense of relation amount to 1500. Now the realization to bank. Realization expense 1500. Okay, now we can go for totaling of it, so that again no need to repeat this. One more thing. Employee Provident Fund, even though you don't have any mention about Employee Provident Fund, nowhere he has mentioned. I told you last class also we seen outstanding salaries. So last but one, I think first problem or second problem, don't remember. Employee Provident Fund is a liability. So this six, whether it is given or not, you need to make a payment. So 6,300 Employee Provident Fund is to be paid. So this also I should write to bank. This is creditors. This is Employee Provident Fund 6,300. Even though any outside liability is not, even that is not mentioned, we should record. We have to assume that it has been paid. Okay. Now coming back to this asset side, credit side, sorry, 1800 plus 4,500 plus 10,800 plus 15,600 plus 12,000. It is coming to 44,700. Just let me check once again. 1800 plus 4,500 plus 10,800 plus 15,600 plus 12,000. It is coming to 44,700. This is the amount realized. Now these two things, whatever I have written bank and whatever I have written bank here, it will be taken to which account? Bank account. In bank account, I should write to realization assets realized including joint life policy, that is unrecorded asset. In this case, in one of the previous problems, we have seen that it has been recorded. In this case, it has not been recorded. Assets realized including joint life policy, that is unrecorded asset. It is coming to 44,700. Then you come back to credit side, by realization. Creditors, realization expenses, and employee provident fund. Creditors is something like 12,100. $12,100, $1,500, $6,300. 12,100, 1,500 is realization expenses. Employee provident fund is 6,300. So 12,100 plus 1,500 plus 6,300 is coming to 19,900. 19,900. Okay. Then this is completed so far. So the payments has been completed. Now let us go close which account? Realization account. Then we can come back to partners capital account. Now realization account, I think in this case also, whenever we are having insolvent, better you first cross check with the debit side. General debit side will be more, but we can't say, sometimes credit side also more. But in this problem, let me start with checking on the debit side. Okay. $15,850 plus 25,200 plus 800 plus 20,000 plus 8,000 plus 12,100 plus 1,500 plus 6,300. It is coming to 89,750. 89,750. 89,750 minus 15,700 minus 6,300 minus 44,700. You're getting a loss of 23,050. This 23,050 is a loss. This loss is to be transferred to whom? Partners capital account. Loss. A. 23,050 into, what is the ratio we have seen there? Profit sharing ratio of A, B, C, D. 4:3:2:1. 4:3:2:1. 4:3, 7, 10. Okay. So 23,050 into 4 is coming to 9,220. Is coming to 6,915. $4,610. Is coming to 2,304. So this loss has been transferred. Now let us go to partners capital account. Here in this case, partners haven't taken any assets. So normally you go for transfer of loss to realization account. Loss. We got loss of 9,220. 6,915. 4,610. 2,305. By going by, I've given note that solvent partners whose capital accounts are showing credit balance should bring cash. So by bank, relation loss brought in cash. $9,220, 6,915, 4,610. Okay. So I've already explained, even though his capital account is showing a debit balance, he has to bring his share of relation loss in cash because he is not insolvent. This I've already explained you. Now, finally, we can close which account? D's capital account. D, 8,415 plus 2,305. This is Garner versus Murray case, rule number 1. Okay. So 10,720. So he's supposed to bring 10,720, but he is able to bring only 25%. No, given that 25 paise in rupee he is able to bring. So by bank 25% of 10,720. It is coming to 2,680. He is able to bring 2,680. So balance 10,780 minus 2,680. 10,000, sorry, 10,720. 10,720 minus 2,680. It is coming to 8,040. Is unable to bring 8,040. This will be transferred to which account? Deficiency account. Or you can write directly solvent partners account also, A and B also. But here, whichever is convenient, you can decide. You can directly write it. You can write the direct entry, or to A and B also. Okay, 8,040. This is completed. Now let us complete the other account. Then we can go for the capital accounts. We can close the capital account. Then also we can simultaneously we can close the bank account also. So now let us start one by one. A, I think A's capital account is showing, credit side is showing more. So 40,000 plus 49,220 minus 9,220. And sir, deficiency is to be short. Just a minute, sorry. This deficiency has to be transferred to whom? Solvent partners whose capital accounts are showing credit balance. No, this I have, sorry, I have not transferred. To deficiency, in which ratio I have told you? 2:1. Deficiency account in the ratio of 2:1. So that is 8,040. 8,040 into 2 by 3. It is coming to 5,360. I told you C's capital account C is showing debit balance. As per Garner vs. Murray case, he is not going to bear the deficiency of insolvent partner. So then 8,040 into 1 by 3. It is coming to 2,680. Even still, whose capital account is showing more? Credit side, A. Now you can make a final payment to A. To bank, final payment. Okay, 49,220 minus 9,220 minus 5,360 is coming to how much? 34,640. Okay, next we can go. I think here also B's capital account is credit side is showing more. 26,915. So 26,915. When credit side is showing more, the amount is to be paid, no? 26,915 minus 6,915 minus 2,680. It is coming to 17,320. 17,320. This is the final payment. Now let us look at C. C, even though it's solvent, since still his account is showing debit balance. So now 4,610 plus 3,200 coming to how much? 7,810. 7,810 minus 4,610. It is coming to 3,200. That means he is to bring 3,200 as since his capital account is showing debit balance. In the beginning, you have learned when partner's capital account is showing debit balance in before dissolution, when he is not insolvent, he should bring cash to the firm to close the all accounts. So by bank balancing figure. Some authors, when you look at the solution, sometimes they will be doing, instead of writing rule number 1, this 4610, they will be adding here also. That is why even I have written 2 times. If you can understand this fourth, anyhow, is capital account is showing debit balance, no? This 4610 also will be included here, obviously. So directly also you can write by bank 4610 plus 3200. But to have a clarity, just I am going by, because initial stages you should follow the procedure, so that later on if you want, you can improvise. If you are comfortable with the problem, few adjustments you can do. See, 4610 you can add here also, because anyhow is bringing 2 times. One is rule number 1. Now this is not actually book entry as far as C is concerned, because C is supposed to bring. It is only in the case of A and P is a book entry. As far as C is concerned, it is a book entry as well as he is bringing cash. Or you can say it is a book entry, even book entry. His capital account is showing how much? 3200. He has to bring 3200. It's a notional entry. If you assume it's a notional entry, the 4610, if you adjusted, how much is bringing? 3200. Some others, what they do, they 4610 they'll be adding. So while doing the problem, you can do various methods, various ways, but concept is clear. Rule number 1, solvent partner. Who is solvent partner? A, B, C should bring their share of relation loss in cash. Okay. Then deficiency of insolvent partner whose capital account is showing credit balance, A and B. That is deficiency. Is to be borne by the solvent partner whose capital accounts are showing credit balance A and B according to their capital ratio, which is 2:1. Okay. Now this has been completed. Now we need to cross check whether our posting everything is correct or not. Before that, let me deficiency account also, since I have opened, to tell you deficiency account at R2 D capital. That is how much we got deficiency, 8040. And this deficiency has been transferred to whom? A and B. Entry deficiency account at R2 deficiency to D, and A's capital, B's capital deficiency. These entries I have given. Solvent partners capital account at R2 deficiency by A, by B, deficiency transfer. The calculation I have already done. 8040 Okay, this deficiency account has been closed. Now let us look at the bank account. Bank account 9,220, 6915, 4,610. They brought the cash now. Here we should write to A, to B, to C. 9,220 6,915, 4,610. Okay, and D also brought his share, no? C has brought 2 times, no? 4,610 plus C has brought 2 times. You can see 4,610 plus 3,200. I have combined here 3,200. How much D has brought? Just I'm going for ledger posting only. How much here brought? 2680. Is coming to 23,425. You know that this is relation loss. A has brought relation loss in cash. Notional entry. B has brought relation loss in cash. C has brought relation loss in cash. 4,000 relation loss in cash is 4,610. 4,610, no? 4,610 plus his debit balance that also he has brought. So 4,610 I have not added. 4,610 plus 3,200 is coming to 7,810. Let me cross check. 7,810 plus is coming to 26,000. Instead of writing C 2 times, I have written like this. And the explanation I've already given. 26,625. Okay. Now, finally, you need to make a payment to A and B. This is what we have done, no? A and B. What is the amount you have paid to A? 34,640. 34,640. 17,320. Bank account should close. Let us see. $71,860. 71,860 minus 19,900 minus 34,640 minus 17,320. Valid. So this is how. So what is the point I want to highlight? Here in this problem, who has become insolvent? D. Even though C's capital account is showing, even though C is solvent, but C's capital account is showing debit balance. But he should bring rule number 1, solvent partner should bring their share of relation loss in cash that we have done. And since C's capital account is showing debit balance, still he has to bring further cash of 3,200. Or you can mix these two also, nothing will happen. Now coming back to second point, solvent partners whose capital accounts are showing credit balance, that is A and B, should bear this relation loss, the deficiency of insolvent partner that has been transferred in their capital ratio. This explanation I have given. Instead of opening deficiency account directly, you can write here, I told you, alternately you can write A and B also you can write. And here in place of deficiency, you can write C account also. It's your wish. You can avoid deficiency. Why I have opened deficiency? Just to explain the concept. Sometimes they may be asking you to open deficiency account. If they are asking you to open deficiency account, the entry has to be, posting has to be done through deficiency account. Otherwise, you will be losing the marks. So be careful, be watchful. I think you should keep on practicing, my dear friends. You should keep on practicing this. Okay. I hope you all are doing daily you are going back and seeing. The caption is same even for this problem. One partner, the caption I have been giving the caption for each and every problem. One partner insolvent, and one partner capital account shows debit balance. And dissolution. When one partner is insolvent and one partner's capital account showing or shows debit balance and then dissolution. so that whenever you are having going for reference before the examination, it will be useful. Or you can have your own way of writing. This caption is for you to remember. That's it. Even if you don't write, nothing will happen. Okay, we'll take up one more problem. Then with one more problem, we complete when one partner has become insolvent. Yesterday one problem you had done, today we are doing, and one more problem we'll take up in the next class. Then one problem I want to give you as a homework. Then we can go for the next topic, right? This is when all partners have become insolvent. So that is the basic about dissolution of firm. Then we can go for conversion of a firm into a company. Those things we discuss, right? I hope you all are following this my lecture. Okay, we'll meet in the next class. Till then, goodbye. Thank you. God bless you all.